Hello, everyone. How is everyone doing today? Happy FOMC Day, George. Good morning, Christo. Good morning, Patrick. Good morning, Donald. Good morning, Dave. Christo thinks Wall Street hates Nike. Good morning, Jacob. Let's see. Good morning, Anissa. Good morning, Tim. Happy trading to you, too. Good morning, Royal Palms. Wow, good morning, Paul. And the people just keep flooding in. All right, how is everyone doing? Hello, Eric. Another one of our overseas viewers. Thank you for being here. Can't forget it's FOMC day today. But before that, we already had the ADP numbers coming in. We don't normally stress that, but that was a pretty big miss and drop from previous. So we'll have to see if that's a one-off or if it's a little softening in employment. At 15 minutes after the open, we have S&P manufacturing PMI still expected to be in contraction. And then we have the ISM manufacturing. Remember, ISM is the bigger firms. Still expected to also be in contraction. A little worse than previous. So we're going to keep an eye on both those. But the big thing today will be FOMC, the JOLTS jobs opening. Forecast to be contracting from previous also at 9 a.m. The ISM employment for manufacturing still expected to be in expansion territory. So that is one to watch just because of so much stuff is keyed around how strong unemployment or employment is right now. All right, then we have the EIA numbers for crude and oil traders, and then the big thing, 1 p.m. today, Central Time, Fed interest rate decisions, and then much more important than that, unless they were to do that 50, which nobody would be expecting, and I wish they would, but I don't think they're willing to shock the market. It would sort of beat everyone over the head with, hey, we're in charge, but they won't do that. He'll try to be, extra hawkish during the press conference. So we'll see if the market believes the Fed yet, or if it's still saying, nah, we think you're going to blink. We think your pauses are going to be short, and then you're going to cut later this year. So let's see how that goes. Good morning, Options 22. Yeah, that is a possibility. We have the market map so far pretty mixed this morning. Pretty mixed. Healthcare is a little down this morning. Little still back and forth profit taking. Nothing shocking there based off the kind of day it is. Let me just hit refresh on this. It looks like it's updated again. We have there's not even a 50 in sight on this FedWatch tool. So that's where that stands. And again, everything's sort of negative. Technology about neutral, but nothing's really. Financials are down 48 basis points. Not big. Not big yet. And we are still up to close to extreme greed, but not quite there yet. So, what does that mean? What does that mean? What does that mean? Also, look at this. I mean, how much more neutral can we get right now with gammas right there? So if we sell off, it accelerates with the negative gamma to the downside. So dealers also are selling into for hedging, selling into the down move. If we rally, the dealers sell into the rally also because of positive gamma. And we're right sitting there. The gamma flip is roughly 4,094. So that's where we sit with that. Earnings this morning, we had Peloton. Did you see that little stuff out from their earnings release? You know, they're cash flow positive if you take away the money they need to pay for suppliers. So look, I have more money than I spend if I don't pay my credit cards. Yay! I mean, that was one of the most moronic things. And if you put that back in, if you like paying their suppliers, they're still deeply negative. So come on, there wasn't much out. Meta after Meta after the close is the big one today, but that won't, it'll still be remnants of the Fed meeting. So, good morning, John. You just need to have some streaming software, George. So, I still had Peloton up there. It's just a slight gap up. That was a miss, and a slight gap up. It's so funny. Oh, well. Let's all rush into... And I love the equipment, but come on. Those earnings were horrible still. I mean, they're somewhat trying to turn it around, but we'll see. We still have the double in place. So, again, that's the only thing that can turn me really bearish today. Is if we, or moderately, not really bearish, moderately bearish. Again, I have to flip this. I'm going to flip this before, based off the high. If the right side high is lower than the prior high, then I will flip it going into the FOMC. Right now, I'll just leave it on here because, again, the targets line up better. But if we rally into this morning into the FOMC, this level's going to have to come up. But the trigger point will not. A close below 4,007.50, essentially. Okay, those are the key levels right now to the upside. We break above 40.84, 40.96, then 41.09. Then 41.20. If it breaks out into the Fed meeting, we got 41.34, 41.49, and then 41.89 in the bigger picture. So let's just take a look at that bigger picture. And, you know, and then your next major level isn't until 40.24, which is the 87.5% harmonic. What would I be focused on if we did have a more substantial rally would be these highs from the mid-Decembers. If we break out with Fed announcement, the highs from mid-December. If we roll over, I'm watching the bottom of the rotation zone and yesterday's low area, which formed the base of the double, and then that to break over the next couple days. Remember, the first target at that double is roughly where the rising 50 is and the flat 200. So I will be really watching that on the breakdown. Other than that, it's either one or the other is going to trigger. Right now, it's still trailing mode also from earlier buys. So, it's still in trailing mode. Cycles still up at the upper end on the daily and at the top on the weekly. So, yes, from a cycle perspective, we can be setting up for a rollover. But unless we really trigger this double, there's no major short unless we get some intraday little setup, which I can't really comment on because it hasn't happened yet. So NASDAQ, key little area I'm focusing on intraday is this 12,199 area. Why we get up there? We do get a potential double top. And then 12,253. Then 12,308. If we break out with the Fed, if we break out the levels above 12,308 or 12,363, 12,418, and then the major level is 12,5 essentially. On a breakdown, we don't have the double in place yet, but if this does eke up a little more, I will be putting doubles on my chart. But the key area to watch for is this 11,871 area for the low. And unless we get the doubles, my target would be down towards 11,761, which is the bottom of the rotation zone. Cycle's also rolling over there. The Dow is just in this huge consolidation. Yes, the potential double top, the little mini double top, is still in place in the Dow. I'm just going to show, this will probably be shifted to that side. But what does that mean? If we get down below the 33,579, it's only a return to this major support level. We'd have to break this major support level before I'm more interested in bigger shorts. To the upside, it's really about 34,475, 34,660, then 35,125. Russell, not much. If we sell back, it's 1915, 1900, 1886, and then very key is about this 1872. To the upside is 1950. And then we got to go shift this. This is not going to be a strong pausing area yet, but it's what I have to work with. So we're still 1950, 1953, 1967, then 1984. The spiders, slight gap down today. Yes, this is. Let's zoom in here. We do have a little mini top. Going to roll this over here. I should say potential. That would need the close below 431. Then you get 397.25, 395.65, 394.09. Anything to the upside would be for the gap fill play, 406.47, then 408.16, and then 410.77 are the key upside levels. On the Qs, you don't have a potential double. It has to get above 296.17 to be a potential double. Right now, slight gap down to the upside on a rally. Besides that little gap fill would be 295.13, 296.17, then 297.21. The bigger levels are still 340 cents and 302.53. If this does form a double, then it would be on a close below 289.90. If we don't get the double, that's going to be a key support level, then about 288. 288 to about 287.70 will be the key support level if we don't get the double. All right. DAX, still nothing. This is just a mess, triple at this point, so no double there anymore. Still in a consolidation sideways. Consolidation sideways. I forgot why I didn't take those off previously. But the minor levels for the DAX would be 15,378, 15,425 on a breakdown. The key support coming in about 15,000. If we do break down below 15,000, 14.9, and then retracement harmonics. The notes on a strong push up, 15.13, and then 15.25 on a breakdown. There's not a great pattern, but 113.27. Then we're looking at about 113.15. But there's not a great, fantastic pattern just set up here yet. So it's a wash for me. On here, we don't have, and this is now looking like a nice little, almost a quad if it pushes a little lower bottom. The only thing I'm keying still off of is yesterday's high at 102.24. A break above there. I'm really targeting about 103 at this point. A break below 101.10 is a quick target to 100. Just in front of 100. VIX, nothing, flat. The double is still there. Crude, pretty much flat. Remember EIA numbers this morning. The key stop level for the triggered double is 74.36 on a closing basis, 72.94 on a trade through basis. The first key level support, though, the first key level of support, and I'm just raising this up because you got to watch this 50% level from the most recent price action is about 76.37. We're going to skip some other stuff. The bonds, the Japanese 10-year bonds, still not spiky above 50. So from my perspective, there's not a great play. I am keeping an eye. However, if we do break down below 129 still, Euro up to triple top territory, but you have major resistance at 109.28. The next major level above there is not till 120.94. Your minor harmonics, I would use these. 109.82 and 110.37. The breakdown area for me is about 108. Pound, not much, unless we really start breaking down below about 122, and the levels to the upside have not changed. Bitcoin's back to sleep. Nothing to talk about there. Tesla. The key level is right around this 176 to get into double top territory. So I am key. These levels aren't valid down here to the downside, but if we do get above about 176, we give you the exact number, 176.18, then we are in potential double top territory, and I will be using these levels lower if that does not manifest. And the only key thing is a breakdown, and we have to the gap fill back from the 26th of January, 160.27. Then your support level would be 153.30. I still have the gap harmonics on here because I'd be watching for the close below 158.02. Right now, if you want bigger targets, if Tesla does break out again to the upside, you're at 190.52, then 237, but I'd really be focused, see how that plays out with the bigger picture. One of my key areas, though, however, would be roughly 195 on a breakout. Remember, this double, if it does trade up here to form it, is a slightly lower probability because it is against the daily rotation zone. And interesting enough, would take it potentially back to the gap level on the closing price from the 25th of January. What else? Well, I do AMD. AMD from earnings. AMD, you still have major overhead resistance at this 200. I didn't think the earnings report was as strong as people thought it is. Other semis based off their guidance were selling off a bit, but your key resistance level is 79.23 to about 79.50. You'd need a close. The technical close in this double is 79.23. I would need a close above 79.50. With this, the potential double top is off the table based off where it's gapping open. What I will be watching for, especially with market weakness, is a rollover gap fill play, 75.15. The only thing that changes that is if it does trigger the double. And that, preferably, if you're trying to be patient, I'd wait for the weekly close above that because it's technically a weekly pattern. So a daily close would be a front run. A weekly close is what's needed for my book to really trigger this pattern since it's a major weekly double. So in order, I'd rather be more conservative in this market than aggressive at this point. Hello, Charles. Good morning, Lauren. Everything is fine. I hope everything is well with you too. There you go. So we sell Peloton. Kramer also said it's a buy on the overall market. Are we starting a new bull market? So is that going to be, you want to know when the rug pull is? Well, maybe Kramer already pulled the rug. So that is about it this morning. Again, I'm going to be really focusing on market internals going into the Fed to avoid getting chopped up unless we do get some kind of trend supported by market internals. Other than there, short term, the trend is still up. We have cycles topping, but we need some kind of trigger rollover play from my perspective to get short. It's not just, hey, let's just get short into the Fed. You know, it depends how unless he shocks the market. But then we have a pattern for a pullback. So don't need to try to sell 4,080s when you get back below 4.7. We could get a quick trip back down to 3,900 on a decent probability pattern with the rotation zone out of the way. So it's trailing. Could be if it's dovish and the market takes his dovish breakout play, and if it really takes his dovish, I'd be watching for that run to the highs from mid-December. That's just my recap. Everything. So, can we check on NVIDIA? NVIDIA. Right now, I mean, nothing's really changed. You're still pulled back to the key breakout from the huge head and shoulders pattern. If you break below yesterday's lows, your next support area would be roughly about 178.20 to 181. Nothing else has changed just yet. You're on a rotation back up. You're watching for 205. Your major target is 231 based off your harmonics. You'd be using 214.70, then about 223.14. Silver is still caught in the range. There's my perspective, unless we get a close back below the 50 at this point, 23.15, we get a close below there, I'll be targeting a pullback play. A breakout play isn't till a close above 24.50. Other than that, it would only be scalpy plays between support and resistance. Thank you, Sterling. So, with that, I'm going to wrap it up going into the open. TLTs, the iShares bonds looks ready to pop. You got the major overhead resistance at 109.20 on any run-up. So we will see about that. All right. I will chat with everybody. There won't be a live stream today. I have too much going on. There won't be a Fed live stream today, but I will be back after the close. Talk to everyone then. Bye for